All right, today I'm going to show you a very powerful trading strategy that is very simple to deploy, okay? Don't discount it because of its simplicity. This thing can make enormous profits. You will outperform the market. You will do extremely well. It's just very easy. I know a lot of us have been trained to think that you have to trade all the time, right? If you're not selling calls or you're not selling puts or you're not doing the wheel, then you're not going to make as much money. That's just not true. It's been proven. There's only certain times in a market you should be selling cover calls, and that's a small part of the time, right? There's only certain times you should be selling cash secured puts, and that's a very, very small time of the market cycle that you're going to be taking advantage of that, right? Most of the market cycle doesn't allow for either of those strategies, cover call or cash secured puts, to be more beneficial than traditional strategies. I know the internet is caught on fire with cover calls and cash secured puts, and everybody wants to learn to trade options. That's propagated by the brokerage companies, I would imagine, because they want more trades, right? They get more commissions, right? And some people say, oh, I don't pay a commission on my trading. Well, there's a spread. That spread is there for a reason. People are making money off it, I'm sure, right? They can't operate and run those brokerage houses for free. So the more you trade, the more money they make. So the more they teach you to trade. They offer free classes, everything else, just to get you to trade. I'm going to show you how to make enormous profits on your portfolio very easily. Okay, let's get started. Okay. Hey, just a reminder, this video is for educational and entertainment purposes only. I'm going to start you off once again with the SPY, which is an S&P 500 ETF trust. Okay, and I want you to just listen carefully to what I'm going to show you here today, because it's just really good common sense way to make a lot of money in the stock market, okay? This is going to be a short video. It's very simple. It doesn't mean it doesn't work. It doesn't mean it's not a good video just because it doesn't take a long time. It's a great strategy for anybody who wants to beat the market with good returns on a consistent basis, okay? And I'm going to show you how that works. Let's just review a little history lesson on the S&P 500, right? Looking back since its inception, we can go all the way back and look and say, okay, ever since this thing was started, and this only goes back as far as 1995, but it has a history of always going up, right? It's got what's called upward drift. So what you want to do is latch on to a vehicle that has upward drift and then learn how to manipulate it to really extract the most profits out of it, okay? So a tried and proven way over time, you can ask any financial advisor, would tell you this is just a basic strategy. Buy the S&P 500 and relax, and you'll just make money, right? It's that simple. You read any book by Warren Buffett or any high-end investor, and they'll tell you, listen, as an individual, the best thing you could do is just buy the S&P 500 and let it go up, and you'll make money. Now, I'm not saying that's the best way to make money. I'm just telling you it's known for going up, okay? I'm going to show you how to take advantage of it, how to manipulate the market and get more out of it, and it's really, really easy. What you're going to do is you're going to look at the market right now. Let's just say you just inherited $100,000 or you just came into or want to scratch off lottery ticket. How about that? You got a lottery ticket for a birthday gift. You scratch it off. You want 100 grand. What am I going to do? Well, you're going to pay taxes. We'll just assume it's tax free. You're going to take that 100 grand. You're going to put it in a brokerage account like a smart person would do. You're going to go open a brokerage account. You're going to deposit that money. And what I would recommend you do is you look at the S&P 500 and you say, gee, I'm trying to build a 2 to 5 year plan. Well, let's go 2 years back and see what would happen if I would have just bought the S&P 2 years ago. Well, 2 years ago is right here, close enough. If you would have bought this 2 years ago, what would have happened 2 years later? Well, I'm going to draw a line and show you. You can see it already, but I'm going to draw it right here. If you would have bought it 2 years ago, January 1st, right around here, and you would have sold it today, you would be up pretty substantially, right? Pretty good trade all the way up to there. Gee, what's happened if you would have bought it, we'll just say 5 years ago. Well, 5 years ago would have been 2021. That would bring you all the way back to here. If you would have bought in 2021 and just held the S&P 500, what would have happened? You would have made pretty good money, right? You would have made market average gains. So whatever the market did, that's what you did, right? You would have just kept up with the market. The market's been doing pretty well since then. You would have done pretty well too. Now, these other lines I have here, let me delete this one. These other lines I have here, these are the channels that I've drawn, right? This is the channel what the market's in currently. And then I have some moving averages here. And in my tactic, if you've been watching my videos, I do a framework. But basically, I know that this market always reverts to the mean. This green line here is the mean. Over time, it's going to revert back to there. It's probably going to overshoot it and then go back up again. So that's what we're anticipating coming in the near future is this down move, right? So some people say, well, gee, what would I do? How would I get in the market? How do I beat the market when it's up here? Well, here's a common sense strategy, right? You could buy it right here. Let's just say you walked in and you bought it right there. Is that a bad play? Perhaps, perhaps not. Well, let's see why it's not a bad play. Why it's not a bad play is because we don't know what the market's going to do, but we know it has a propensity to go up over time. It has upward drift, right? So over time, it always drifts up. Doesn't mean it can't pull back in any given moment, but it always drifts up, and we know that. So you buy it right here, pretty common sense play, and you let it start drifting up. If it goes up, you make money, and you're happy. Well, gee, I'm just going to do what the market does. What would I do? How do I beat the market? Because I promised you in the beginning of this video, you'd beat the market by a lot. Well, I'm going to show you how you beat the market by a lot. When you enter this position, let's just say today you walk in with 100 grand that you just won off your scratch-off lottery, and you buy it right here, okay? And you buy the SPY. Well, what I would recommend you do is you put partial investment into that ETF. And I would recommend that you spread that money over what I call the SPY mix. And the SPY mix is filled with a handful of ETFs called the SPMO, the SPYG, right? Maybe a little bit of the SSO, and then the SPY itself. And you can spread those around however you wish. Watch some of my other videos. I give some other ideas how to do it. Spread those around however you wish, but only put them in half to 70% of your portfolio, okay? Because now what you've done is you kept 30% in cash. So now that 30% in cash is doing what? It's waiting for the inevitable. Now you could take that cash and invest it right now, and you know the inevitable is it's going to go up. But I would take that 30% cash and I would sit and wait, and I would wait for this market to do what we know it's going to do. And it's eventually, it might go up like this, and it might go up like this, and then eventually it's going to come down. And when it comes down, if you watch my video on the VIX trade, or you watch some of my other videos on how to leverage up, you could say, gee, when the market comes down, I'm going to jump in again right here, but I'm going to buy leveraged instruments. A leveraged instrument would be the SSO, right? You come down here, you buy the SSO. When the market recovers, that SSO, let's just say you have 30% of your money in it, it goes up twice as fast as the S&P. So now you're going up twice as fast as the S&P on recovery. So now this has come down. This is going into recovery. When that gets back to even, this is going to be up substantial. And then from there, as the market continues to go higher, your 30% investment in the SSO is going to go up twice as fast as the market. 70% of your investment will be in the SPMO, the SPY, we'll just say the SPY mix. Okay, that's going to go up faster than the SPY as well. If you watch my other video on how to invest in that, you'll see it goes up faster than the SPY on its own. Now you have a leveraged instrument going up twice as fast. You're beating the market. You're beating the market by a lot, and you're not really doing anything, right? You just bought in the SPY mix right here. We'll just say with 70% of your money, the other 30 grand was sitting in the money market collecting interest, waiting for this dip. It dipped to here, and now you deployed it at twice the speed, right? Twice the speed of what these horses run at. This new SSO horse is going to run twice as fast. It's going to go up substantially faster. Now, you can play around leveraged instruments all you want. If you're familiar with leaps, you can add some SPY leaps. You can add some QQQ instruments. You can add a variety of high beta positions down here. But what you really want to do is just make sure when the market recovers, you're going to recover with it. So you want to add something that has upward drift. Very important. Don't just add, your favorite stock, because sometimes your favorite stock doesn't come back when the market comes back, right? The S&P 500 always comes back. Your favorite stock, that's a crapshoot. And people argue with me on that, say, oh, I pick quality stocks, I know it's going to come back. Well, let me show you some quality stocks that didn't come back. Here's one well-known one, and let me show you this. Right, that is Nike. Look at that. Look at that. That market dropped. It has not come back. Okay, it's still struggling. Let me show you one other well-known one called Disney. That market dropped. That stock has not come back. And one other one I'll show you, Hershey. That one has dropped, has not come back. So don't buy a stock that's not going to come back. Make sure you get a upward drifting instrument, mainly the S&P 500. Is what I'm stressing here. It's going to recover. It's recovered every single time since the inception of it. You know it's going to recover, you just don't know when. But when this dips, You can leverage up right here. Now, the risk you're taking is if you leverage up right here and it drops further, well, you're going to have to wait that out. But you know it will recover because it's the S&P 500 ETF. All right, I hope I'm making sense. I have a guideline below. It's in the description, the first link. You can download it for free. It gives you some ideas on how to trade the markets at different cycles, right? A lot of people just want to sell cover calls all the time. And I'm sorry, but that's just not a good strategy to do all the time. It's a great strategy. Don't get me wrong, to do at the appropriate time, but it's not a great strategy to do all the time. Neither is cash secured puts, neither is the wheel. You have to trade with context. You have to have a system, a strategy, a framework to follow, right? When to get in, when to leverage up, when to get out, when to sell cover calls, when to sell puts. And I have a put video coming out soon too that you're going to like. So subscribe to this channel, download the free guide, like this video if it's helping you, put in some questions. I'll be happy to answer them. Thank you for tuning in, and I'll talk to you soon.